Tata Motors, and I think let's put that into perspective with Ajay Srivastava as well as Abhishek Gaoshinde. Both of them need no introduction. Abhishek Gaoshinde from Sharekhan, Ajay Srivastava, Managing Director at Dimensions Consulting. Gentlemen, both of you, thanks for taking the time out and joining us. Okay, Abhishek, can I start off with you? Is this a big trigger for Tata Motors? Because part of this was anticipated just the way it's been done, wherein India is a PV is separate and CV is separate. So is this a big mover for Tata Motors?
What I would say that this is a part of the ongoing process that the Street has already identified the potential of the individual business and have been valuing long this business individually. As you know that we don't value Tata Motors on a consolidated basis, we value it on the SOTP basis. So it is a part of the ongoing process, although it have its own positive benefit. At the now, no business would be a piggyback on the other business and will give an adequate flexibility to investors to play a cycle of his own choice. And side by side, the company can also build up a plans according to the growth cycle of the individual business.
Well, we also have Ajay Srivastava joining in. Ajay, good morning. Thank you for joining us.
Good morning.
Ajay, last evening, of course, as soon as the markets closed, Tata Motors decided to keep everyone busy. They've announced the demerger of those two entities. Do you think this is already in the price? What are you making of this move? The counter has been one of the biggest movers of 2023 and continues to draw investor attention.
No, see, good morning. I think it's a great move. It was in the market. It was not in the market, but also what drove the share price was the first profit they made in almost a decade at this point of time. So I think that is a great trigger that they become a profitable company, and then JLR became EBITDA positive and cash flow positive. So I think there were a lot of positives sitting there in the news already. But I think even after having said that, this news is a good trigger for the retail investors, for everyone to buy into, because you're going to buy two big auto stories. And the re-rating of car business, I think that's going to be important. People neglected it. People never said, no, JLR being a foreign company, but so be it. At the end of the day, it's a highly profitable brand. There's huge demand all over the world, including India. And I think it's been seriously undervalued at this point of time. So once they split it, you will see the real value of the auto business coming to the fore. And of course, the commercial business is what it is. But I think the real re-rating will happen in the private vehicle space, and the real value will come to the place that we got a global brand sitting in India listed, available to be invested in. So I think it's a great move. If you can buy, we would definitely say it's a good place to be. But you have to wait for the scheme. The scheme is going to take 1 year at least. So by the time you see the shares coming back to you, different shares or new shares of the car company, it'll be at least 1 year to 15 months. So you got to be patient on it.
Yeah, Ajay, very good morning. Tamanna here. Great to be speaking with you. You know, this is something that Neeraj also spoke about earlier. All the brokerage notes this morning and so many divergent views. I think there's a whole rainbow of target prices as well. And on the side of a bit of concern is that, is there really going to be that much value unlocking, considering that these two verticals in a sense were being run separately, the CV and the PV business, plus the stock has already run up massively. What side would you veer on? Those who are extremely positive and euphoric today and see a big upside on the stock price, or those who are saying, let's be a little cautious, it's good news, but material impact may not be that large?
Oh, Tamanna, I think definitely we're on the side of being optimistic. Definitely we believe that the real re-rating of the car company will happen once the split. And, you know, it's always good to say they were run separately, but, you know, if you know how companies run, and you know better than anybody, it's just not possible for two of such diverse business to put inside a company. There's a fight on capital allocation, there's a fight of who gets promoted, there's a fight of the CEO's priorities at the end of the day. You know, so it's theoretically the answer is good. There were two SBUs, but SBUs don't become businesses. Now when these two companies become separate, now when the challenge comes to see the market cap of two companies, each company has to now compete to the market for capital, for debt, and see how the performance goes. So I think it's just going to change the dynamics completely. It's just not about two SBUs being separated. I think it's been creating one of the largest car companies in the world in the making at this point of time. I think we're really underestimating what's going to happen to the EV push out of Tata Motors. We're really underestimating the premium brand they carry. It's amazing. They've got a huge backlog of those brands. Nobody else has those brands in SUV space particularly. Tata Motors, JLR has it. Okay, so I think we definitely on the side to believe that a serious re-rating of car company will happen eventually, and we will see a global juggernaut emerging in India out of the car company. Yes, lots has been factored in, but so has our life. But I think there is a lot more to go for this company in the next couple of years to come. And being separate, I think is be a fresh breath of fresh air for the car company employees, because they can see themselves separate from the the truck company, which is going to be a little more stodgy company. It has to grow slowly. Only the e-buses are going to grow very well in that segment at that point of time. But car company, I think, is going to be a flyer.
Quick word from you, Abhishek, on comparing what these two demerged units are going to look like, or these two separate companies are going to look like. Of course, you have another 12 months perhaps to see them. But between the two, is it a safe bet to say that the PV segment is the one where you see real value and growth potential?
See, we have to first of all look about the business model of the company. So in the CV business, the company has been a market leader. And we have a listed, pure CV listed companies in Ashok Leyland. So still we are valuing Tata Motors at a higher valuation compared to the Ashok Leyland, and giving it a premium on the basis of its leadership in the CV segment. And now you talk about the this PV segment. So in the PV segment, we have currently two segments. One is the JLR and the domestic PV. And you see the domestic PV segment has been gaining market share. But in terms of absolute EBITDA, it's a substantial lower than that of the market leader Maruti. And because of this market share gain, we have been seen a kind of a re-rating in its domestic PV business. And currently, the discount between the discount which we have earlier between the Tata Motors domestic PV business and the Maruti has been narrowing down, and the valuation of the JLR has been moving up. Now your question is that which one would be better? I would say that the sum of the parts would remain largely same or improve from here, given that the both the its business are on a cyclical on a upward trajectory, and has been seeing a continuous re-rating. So in preferring between the two, what I would say that in a CV peg, I would prefer the Tata Motors CV business, considering its leadership position. And in the PV business, considering the association with the JLR and a global presence, definitely this PV business will get edge in the PV peg. I'm not comparing it between the PV and the CV. I'm comparing individual business in their individual segments.
Okay, fair point. Ajay, one question. So this is great news. Let's assume the stock starts slightly higher. What to do next? If somebody is not a shareholder as yet, or if somebody is a shareholder, I'm presuming the answer would be that, based on your answers, that stay invested. For somebody who doesn't have, is Tata Motors, by virtue of this, a good fresh investment candidate, or not really?
See, we can't recommend cases, but we definitely believe that the restructuring stories in the past, so such events, have always released tremendous value. And there are a number of such cases now which have seen happening, where the split of the companies happened and the valuation. And it's optically also, the shareholders get free shares in this company. So it may assume sum of parts, etc., etc. The accounting and mathematics may tell you you're getting the same thing twice over. But at the end of the day, if you hold a Tata Motors shares today, or you buy it today, you will have one more share of the car company tomorrow. So just optically it works, practically it works, it's historically it worked. So I don't see any reason why it should not work now.
Ajay, I'm going to try and communicate what I'm thinking over here. But what I want to know from you is when you had Reliance Industries and Jio do that demerger, Jio came out of the index while RIL, of course, stayed. Now, when this CV business, when Tata Motors gets split into the Tata Motors CV and Tata Motors PV, CV, I'm assuming, is 25% of the market cap. Does the Tata Motors CV then step out of the index? Just explain that and help our viewers understand if there's any significant impact of that. And also, is there a strategy? Because I know there were a couple of brokerages that were talking about the Tata Motors and the DVR spread, and a strategy on that front, because that will also be merged together in the next 6 to 8 months. This demerger process will coincide with that. Anything on that trade between Tata Motors and the DVR?
See, that's a DVR is a pure price arbitrage of a non-voting share. So it's nothing much in terms of fundamental difference. And for an average investor, it really doesn't make a difference. So for an investor, if you invest through DVR, you really don't get voting rights. Not that we vote or have a significant say in the company either ways. So I think that's a DVR is a pure arbitrage play. Now the question is, when you come to the index, as you saw what happened in Reliance as well, the total value has gone up. But there is if and as at that point of time, one of the two does not meet the index norms or market cap, then the same thing happens what happened to Geo. You take 60 days or 30 days, and then they gradually ease out of the index at the point of time. But I think that's it's still immaterial to my mind, because the big chunk of the value is being unleashed by this restructuring will be so much better than compared to this minor impact if some part of this company doesn't go out of the index. It doesn't really matter actually if you're out of the index, if the commercial vehicle is out of the index, because you've already seen the mid-cap story in India is far superior to the large-cap story. So being in the index in India has not been a great advantage, at least in the last 1 year or so. In fact, it's worse off. People don't want to be there and invest in it. So I think being part of the CV, being part of the index, we'll know only when the time comes what's the market cap and what's the cutoff. But I don't think it's a material event that one should worry about from a retail investor's point of view, that whether it'll be an index or not. Certainly the car company will be in the index, definitely for sure. And the commercial vehicle, we will see at that point of time. Even if it is not, it'll be in the top 50, the next one, which is as good as can be. So I don't think one should worry about index, and given the fact that mid-cap index does so much better in India now, I think it's maybe it's just a blessing in disguise. One guy remains in the top index, one guy goes to the mid-cap index.
Thank you, Ajay. It's always good talking to you. Abhishek, Abhishek, 5-second answer. With this news development, have you changed your rating on Tata Motors?
No, we have a buy rating on the stock, and Tata Motors is our top pick, and it will remain given the kind of fundamentals we are seeing in the company and the developments beyond this news. This is the part of the whole bouquet of the news flow or the developments which are happening in the company.
Right. Thank you, Abhishek. Great having you on the show. It's a buy call on Tata Motors.